Hi, it's Bill with the Home Premier team with another news update. Home buyers in search of affordable options to purchase their dream home now have a new solution: mortgage buydowns. As the market is starting to change, sellers are more willing to help buyers with their purchase by offering a mortgage buydown. Sellers can benefit from offering reduced payments over time instead of lowering the price of their home, while buyers can gain access to properties that may otherwise be out of their budget range due to increasing interest rates. For example, the 3-2-1 buydown, the buyer pays a lower interest rate over the first 3 years in return for an upfront payment to the lender from the seller. The interest rate is reduced by 3% in the first year, 2% in the second year, and 1% in the third year. So a 6% mortgage would charge just 3% in year 1, 4% in year 2, and 5% in year 3. After the buydown period ends, the lender will charge the full interest rate for the remainder of the mortgage. In the event that the market's interest rates drop by the third year, the buyer always has the option to refinance. Buydowns are not the same as adjustable rate mortgages. On an adjustable rate mortgage, the initial interest rate is fixed for a set period of time before adjusting to a variable rate, which resets periodically, making your monthly payment go higher or lower. Buyers should still be cautious because once the discounted rate ends, their monthly payment could end up higher than they can manage. That could be a problem if their income drops after buying the home. Could the mortgage buydown option help you get into your dream home? Contact me to find out. Let's talk. Thanks for watching, and please like, subscribe, and hit the bell button so you don't miss the next update. See you next time.